Ever wonder why Thursdays feel different in the Indian stock market? It's because every Thursday is the weekly expiry for Nifty 50 options. On this day, traders must decide close, let expire, or roll over their positions, creating a surge in market activity. Think of it as the final hours of a big sale. Everyone rushes to act before the deadline. The Nifty 50 index, representing India's top 50 companies, often sees sharp moves, especially in the afternoon. This is when collective trader actions can swing the index up or down. Thursdays bring higher trading volumes and bigger price swings than usual. For traders, understanding the importance of Thursday is crucial for planning and risk management. It's a day of both opportunity and risk, so knowing how expiry works is fundamental. If you trade in India, mark your Thursdays. They're anything but ordinary. Expiry days are famous for high volatility and volume. As options approach expiry, their value decays rapidly, forcing traders to act fast. This urgency leads to a flood of buy and sell orders, pushing the Nifty sharply in either direction. Big players unwind massive positions, adding fuel to the fire. For example, large funds closing out calls or shorts can trigger sudden rallies or drops. The psychology is key. Everyone expects volatility, so they trade aggressively, creating a self-fulfilling cycle. Even minor news can spark outsized moves on Thursdays. Gamma squeezes, where small price changes force big trades, are common. Expiry day is a perfect storm of action and reaction. That's why Thursdays are so dynamic and unpredictable. If you're trading, be ready for anything. Let's look at real expiry day drama. On March 19, 2020, a Thursday, Nifty crashed 7.5% as COVID panic peaked. The expiry day rush amplified the fall, with traders scrambling to exit. Just a week later, March 26th, another Thursday, Nifty surged 6.6% after global stimulus news. Short sellers rushed to cover, fueling a rally. Expiry days magnify both panic and euphoria. On February 24, 2022, the Russia-Ukraine war broke out. Nifty plunged nearly 5% as traders dumped risky positions before the weekend. Even domestic news, like RBI policy surprises, can trigger sharp expiry moves. For example, on October 26, 2023, Nifty rallied 1.6% after positive global cues. The lesson? When big news hits on a Thursday, expect amplified market moves. Expiry days turn ordinary news into extraordinary action. To trade expiry days smartly, watch for key triggers. First, check the event calendar. Major announcements like RBI meetings or global data can spike volatility. Global market cues matter. Overnight moves in the US or Asia often set the tone for Nifty's open. Before Thursday's session, see how global indices are performing. Options data is crucial. Look at the put-call ratio, PCR, and open interest, OI, to gauge sentiment. High OI at certain strikes can act as magnets or barriers for Nifty. Technical patterns help too. If Nifty's been in a tight range, expect a breakout or breakdown on expiry. Watch for triangles, channels, and the India VIX. Rising VIX means traders expect bigger moves. Combine these signals for a clearer picture. Preparation beats surprise every time. Expiry day rewards those who watch the right triggers. Trading on expiry day? Keep it simple and disciplined. Combined signals don't rely on just one indicator. Stay alert for breaking news. Expiry moves can accelerate in minutes, especially after 1 p.m. Treat every expiry Thursday as a high volatility session. Use smaller positions and always set a stop loss. Protecting your capital is priority one. Don't fear volatility, but respect it. Stick to your plan. Understand why expiry days are different. Watch key triggers and manage risk tightly. Smart, cautious trading is the key to surviving and thriving. Thursdays offer big opportunities, but only for those who are prepared. Trade wisely and let discipline be your edge.